The latest home price forecasts have just been released. So can you expect a big drop in home prices in 2023? Stick around to find out. Hi, this is Andrew with the Andrew Smith team in Frisco, Texas. And home prices have been on the mind of a lot of people recently, at least a lot of people I've been talking to. A lot of potential buyers have all said the exact same thing when I've been talking to them. There's some that are saying we're still really interested in buying, but we're going to wait for prices to come down. We're going to sit on the sidelines a bit longer and wait for prices to come down. So the question is, are they going to come down? And if so, by how much? So I want to start off just by saying that, look, the honest truth is nobody knows for sure what's going to happen with home prices. If you go back and look at anything that's been published by anyone, you'll see that it fluctuates. It changes. And why is that? It's because nobody has a crystal ball, right? Nobody knows exactly what is going to happen going forward. There's a lot of economic uncertainty out there. Anything can happen, events worldwide that can have an impact on it. So with that in mind, again, take all the information with a grain of sand. So my role here today is not to convince you that now is a good time to buy a home. It's not to convince you that now is not a good time to buy a home or sell a home or vice versa. Okay, I'm not trying to do that at all. What I'm trying to do is share the information with you that's based on the latest available data so that you can cut through all the headlines, cut through all the stuff that just promotes fear, and make a decision for you that's best for you, because the decision that's best for you is not going to be the best decision for somebody else. All right. So I'm just breaking it down. And, you get a lot of opinions. And whenever, obviously, myself as an agent comes out with information like this, there could be some blowback. There can be some pushback. And I'm good with that. They're saying, well, why in the world would you listen to an agent talking about the housing market? And, to be honest with you, I think you should always take a look at where you're getting your information, but where are you going to get your information on the housing market? The plumber, the waiter, right? I mean, this is what I do. I've been doing it for over 20 years. This is what we do. So again, I'm sharing the information with you, again, to help you make the best decision for you. And I will say that while all of the focus has been on home prices, it's really important that you pay attention to mortgage rates as well. And if you stick around to the end, I'm going to show you exactly why that makes a big difference. So again, let's jump into it. So, right now, a lot of people, as I said, have been sitting on the sidelines, right? They're waiting for home prices to fall. And here's what Taylor Marr recently had to say. He's the deputy chief economist with Redfin. And he said, for those bearish folks eagerly awaiting the home price crash, you'll have to keep waiting. As much as demand is pulling back, supply is reducing as well. So therefore, there's not as much downward pressure on prices in the short run. So what's Taylor actually referring to there? Well, the expectation was, if you go back a few months, that especially as mortgage rates started to tick up, and they accelerated rather quickly, that it would absolutely cut the feet out from under buyers. Buyer demand would fall through the floor. Therefore, supply would keep going up, and we'd start to create some imbalance in supply and demand, which would put downward pressure on home prices. But in actual fact, that hasn't happened in most areas of the country, and it hasn't happened to the extent that it was originally thought to here in North Texas as well. Has buyer demand been diminished? Absolutely. The minute mortgage rates went above 5%, buyers ghosted everything. They just flat out stopped. And I get it. But at the same point in time, we've actually seen supply fall as well. That wasn't necessarily expected at first. Why did supply fall? The idea was that supply would keep building. Well, let's face it. If you own a home right now and you were thinking of selling, but you didn't necessarily have to, why would you? You're probably locked in at a mortgage rate between 2.5% and 3%. You're sitting on a substantial amount of equity, depending on how long you've owned your home. So why sell? If you put your house out there and it didn't sell, take it off the market. And you're seeing that. You're just seeing these properties come off of the market completely. So therefore, even though demand has come down, supply has come down as well. So you're not seeing that rapid descent in home prices many people were predicting. Now, saying that, here's what the latest forecasts from the experts are. And there has been a little bit of a change, which you'll see in just 1 second. Fannie Mae, that had been forecasting prices to increase in 2023, have now actually flipped into the red column. They're actually forecasting a very slight price decline. So here it is. Here's the latest forecast. So as you got the Mortgage Bankers Association, the Home Price Expectations Survey, which is a survey of leading economists, and the National Association of Realtors, all forecasting prices to increase in 2023. Not a lot, but they're forecasting them to increase. Whereas you've got Fannie Mae now forecasting a 1.5% decline, and you've got Ivy Zelman of Zelman and Associates on the far end of the spectrum with a 4% decline for prices for what she's looking at. Now, again, those aren't drastic drops, and they're certainly not the drops that most people had been expecting or maybe even hoping for. That would result from crash type conditions, which still, regardless of what anyone says, there is nothing in the data as it exists today to indicate that is going to happen. Could that change tomorrow? Absolutely. But as of today, it doesn't show up at all. What is looking more likely from the latest data is that home prices are not going to keep accelerating and appreciating as they have been, and that things are going to start to go flat. Now, on the flip side of that, the big banks don't agree completely with the prior survey that was done. So here, take a look at this. So Goldman Sachs are foreseeing that prices in 2023 could fall between 5 and 10%. Wells Fargo is forecasting that prices could go down 5.5%. Moody's, a drop between 5 and 10%. And Morgan Stanley, a drop of up to 3%. Now, I'd like to point out, though, that these right here, it's not going to be the same in every single market. Every single market is unique, even Moody's, right? What they're forecasting is that 5 to 10% could be experienced in the most vulnerable markets: Boise, Phoenix, Austin, as an example. The areas that saw the most rapid price appreciation over the last 2.5 years. Those are the markets that are looking to possibly have the most exposure for downward pressure. But I think it's interesting to point out there that even when you look at those forecasts, those aren't like catastrophic drops. That's a correction, not a crash. I've got a link to a video I did just a week ago talking about the differences between a crash and a correction, right? So take a look at that. But the point being is, the worst case scenario someone is forecasting there is 10% of those banks. Again, could it change? Yes. But I'd also like to point out that they're forecasting this to be very short-lived. So here's a look at what Wells Fargo have to say when you extend their forecast out. So in 2023, they are forecasting a 5.5% decline. But look, they're now forecasting 3.1% increase in 2024. So this is very, very short-lived in any sort of dip or correction that most of the forecasters have. Now, I can tell you here in North Texas that there aren't really many forecasts for a decline in our markets. We're still seeing price appreciation in the 14 to 20% year over year as of September's numbers. And I would like to point out that our markets here for Frisco and Prosper, where I work most of the time, we saw our prices peak in April and May, and they did decline all summer. But in both markets, in both cities in September, prices actually ticked up a bit. Now, I do expect that that will come back down, and they'll continue trending down towards the end of the year. And that I can then see prices going fairly flat for our local market here. Now, how will your local market be? Well, in the description below, I've got a link to the market report that's put out every single week for Frisco. If you're not in Frisco, that's fine. At the top of that report, there's a search bar. You can put in the city or zip code, any city or zip code in the country, and get the latest information directly for your market. Now, for those of you still with me, I did say if you stuck around till the end, I'd show you why, instead of solely focusing on home prices, you really need to pay attention to the mortgage rate. So I'm going to share my screen with you now. Okay, hopefully you can see this okay. And this right here is, it's a buy down calculator for an interest rate buy down. And the reason I'm sharing this with you today is it's a great way to kind of show the differences in mortgage payments based on the mortgage rate, not necessarily just the home price. So here in Frisco, pretty realistic. The median sales price this last month was right around 650,000. So I'm using 650 here. So if you were to be buying a home at 650, 10% down, that would give you a loan amount of 585. And if you had a mortgage interest rate right around 7% where they are today, that monthly principal and interest payment would be $3,892. All right. So let's say prices did go down 10%, which was the most aggressive of those prior forecasts. So let me change this number for you here to a 10% reduction. So you can see the mortgage payment drops to $3,502 at that 7% rate. So a savings, somewhere in the region of $400. Okay, $400 is the savings with prices coming down 10%. But let's go back to that 650 for just a minute and take a look at this. So I've got this in here of what would happen if the mortgage rate was actually 5%. Well, you can see at 5%, even at the higher purchase price, the monthly mortgage payment drops to $3,140. That's a savings of $751 a month. That is a greater savings than a 10% decline in the purchase price. So why do I bring this up? Well, for any one of you that are looking to buy a home right now, one of the things that you can do, and that I highly recommend, I'm recommending to all my clients do, is negotiate with the seller to contribute money towards lowering the mortgage rate that you are going to be paying. The reason for that is your monthly savings are much greater with a lower mortgage rate than they are with just a lower purchase price. And it is widely expected from everyone that mortgage rates are eventually going to settle back down between 4.5% and 5%, although it could take us 18 months, 2 years to get there. So again, although the focus has been on home prices only, the mortgage rate makes a huge difference. Best case scenario is you get that 10% reduction in purchase price and a lower mortgage rate. But, the jury's out on whether or not that is actually going to happen. So right now, there's definitely more homes available. There aren't bidding wars. You can negotiate for concessions, and that's one of the areas that I would be looking at. In fact, it's one of the main reasons why, if any of you have considered new construction, why all the builders are offering interest rate buy downs right now, because it makes the biggest difference with regards to monthly payment. So again, hopefully this information was useful. If you have any questions whatsoever, please don't hesitate to reach out. You can always give me a call at 469-296-5230 or send an email to contact@theandrewsmithteam.com, and I'd be more than happy to discuss your particular situation with you. Until next time.